Ladies and gentlemen, good day and welcome to Mech Projects Q4 FY24 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Natasha Jain from Nirmal Bang Equities. Thank you and over to you, ma'am.
Thank you, Steve, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes you all to the fourth quarter FY24 earnings conference call for Mech Projects Limited. From the management team today, we have Mr. S.K. Ramaiah, Director, Business Development, Mr. Rohit Sajja, President, Business Development and Operations, and Mr. N. Aravind, Chief Financial Officer. I now hand over the call to the management for opening remarks, post which we can take questions from the participants. Thank you and over to you, sir.
Thank you, Natasha Jain. So this is Nani Aravind, CFO of Mech Projects Limited. I have with me S.K. Ramaiah, Director, Business Development, and Mr. S. Rohit, President, BD and Operations. I welcome you all to the earnings call, quarter 4 and 12 months of operations of FY24. The reported total income for the quarter 4 financial year FY24 is 1,312 crore against 1,183 crore in Q4 FY23, an increase of 11% year-on-year. EBITDA is around 160 crore as against 140 crore, a growth of 14%. And PAT is 84 crore, which has grown by 12% compared to 75 crore in Q4 FY23. The revenue mix for quarter 4 FY24 is as follows. Mechanical business has contributed 176 crore versus 148 crore in Q4 FY23, showing an increase of 19% year-on-year growth. Civil business, including railway, water distribution, contributed 766 crore versus 761 crore, almost flat. O&M revenues are 350 crore against 247 crore in corresponding period last year, registered growth of 43%. And electrical business 6 crore versus 18 crore, a decline of 66%. Other income 10 crore versus 9 crore in Q4 FY23. So during quarter 4 FY24, the distribution between domestic business and international business is 90% and 10% respectively. Contribution from power sector remained at 49% and non-power contributed 51%. Performance for the financial year 24, the reported total income for FY24 stands at 4,234 crore against 3,618 crore reported in FY23, showing a growth of 17%. The EBITDA is 524 crore as against 421 crore, grown by 25%. Well, the profit after tax came at 248 crore against 209 crore in last year, clocking a growth of 19%. The revenues from mechanical business were around 692 crore versus 606 crore in FY23, showing a growth of 14%. Civil business 2,352 crore, including MDO revenue of 41 crore versus 1,995 crore in FY23, grown by 18%. O&M revenues rose by 18%. To 1,109 crore as against 930 crore in FY23, and electrical business 53 crore against 69 crore in FY23, a decline of 24%. And the mix between domestic and international business is 92% and 8%, and the power and non-power business contributed equally in FY24 with 51% and 14% contribution respectively. So with the better deployment of capital, improvement in margins, the operating cash flow for the period is positive by 204 crore. Net current days have come down to 112 days in FY24 from 131 days in FY23 due to increase in the realization of bills. The debt levels are in control. As on 31st March 2024, the gross debt is around 388 crore and the net debt stands at negative 155 crore. The debt equity ratio as on 31st March 2024 stands at 0.21%. So order book status in the financial year 23-24, the company has secured orders worth of 8,759 crore as against the set target of 10,000 crore. The order backlog as on 31st March 2024 is around 57,053 crore. if we exclude the two MDOs, the unexecuted order book stands at 17,362 crore. So, in margin profile improvement is also seen in overall margin profile. EBITDA margin has gone up from 11.62% in FY23 to 12.37% in FY24. So expectations for FY25, Power Mech is well set to demonstrate execution and conversion in the range of 38 to 40% in the opening order book. In addition to that, revenue from MDO business also ramping up. There is a little bit of slowdown in some areas due to prolonged election schedule. We'll keep a conservative revenue growth target of 30% for FY25. On the margins front too, the direction is on the upside. We will witness further improvement in FY25. We will be close to achieve our peak margin levels in this year. Once the MDO revenue peak during the FY26, the margin profile will seek a market increase. On the order book side, we have set a target of 12,000 crore for financial year 2024-25. Our focus will continue to be on industrial plant operation and maintenance, railways and water. Going forward, O&M and MDO business will provide stability in revenues as well as margins in a significant way. Now I request Mr. Ramaya to update on the developments.
Yeah, thanks everybody. Good afternoon. As Arvind has given the numbers on the revenue and then the present status of these operations. We are happy to say the market is on bullish side and hoping the elections will take a positive turn. And in spite of the certain developments of the elections and all, we have done pretty well in the fourth quarter. Now the order backlog has gone up from 13,733 crores last year to 17,360 crores, which is a growth of 26%, mainly driven by the civil side with a backlog increase from 136 crores to 7,814 crores, an increase of 27%. But what is very interesting thing is the O&M side has taken a quantum jump. From a backlog of 600 crores last year, it has gone up to 2197 crores, almost 266%. And the electrical also has come to life in a big way, mainly in the many jobs taken on the railway electrification jobs. The backlog has gone up from 118 crores to 930 crores. So that is a very positive thing in terms of the overall growth. Of course, mechanical, there is a small degrowth, 6879 crores to 621 crores in the backlog. But in the case of the power and non-power, the backlog is 11,145 crores for power, non-power is 6217. That ratio is continued to be on the slightly in favor of the power side as on today. Now, what is important is that we expect positive things in terms of investments, and then a lot of projects are coming. In fact, we expect at least 60 to 70,000 crores of opportunities to be focused on this year on a regular basis in various sectors. And some of the positive things can be the power sector is taking a quantum leap in terms of the gaps to be filled up in the investments and installation, are adding about another 60,000 megawatts from 218 gigawatts to say 280 gigawatts. Already BHL is have got a lot of orders in terms of now there were 70,000 crores orders with a megawattage of 10,640. Now the ongoing projects are about 25,000 megawatts. Now if that has to be bridged, at least another 40,000 megawatts on priority ordering has to be done, particularly by the utility companies like NTPC, DVC, and then private companies also. Therefore, that is where we expect the lot of order flow will happen in the power sector. There is going to be a revival, and and then there is another important development that has happened to just see how it can happen. Apart from the identified projects in various power sector, NTPC plan for more than 30,000 megawatts. Then other utility places like DVC, then this one MPGCL, Madhya Pradesh Generative Board. Then NTPC, apart from NTPC, then this one GSESL, Gujarat State Electricity Company. All these companies are also planning capacity addition, including Coal India. So if these things mature, maybe the investments can go up to 3 to 4 lakh crores additionally for the power sector investment, and that should give a lot of. We have got A lot of say in power sector is with our end-to-end solutions in civil, structural, mechanical, electrical, and even O&M also. Therefore, that is what we expect is that. Now, apart from that, the other infrastructure projects, what is very important is the railways. In fact, railways, we have done extremely well. In fact, presently we are executing projects of 2,500 crores, and with 3 new projects of 1,280 crores in southeastern railway and in central railway. That has got both the civil and track laying and also electrical component of the business. And then the new maintenance depots and infrastructure to be developed in various railway projects, and then even for the metro projects also. Because now we have got experience of doing the metro project, it's going pretty well in Bangalore, 427 crores. And that type of projects, more and more projects will come up. And railways, we have seen last year the government allocation of budget is 2 lakh crores, and they will make a huge jump in the investments for the railways and the roads also. For railways, roads, balance of the drinking water, still about 15 crore households have been penetrated as on today. We are doing a major job in UP out of 2,726 crores, and we continue to have opportunities in Madhya Pradesh, Maharashtra, Karnataka, and Kerala also. That is also there. Railways, then water systems, then urban renewal projects and sewage treatment plants. Then apart from this, there is a major opportunity coming up in the private sector also, in the oil and gas sector and other sectors also. Therefore, and then there is one more area in the power sector, what I would like to say, about 11,000 megawatts of plants are getting revived. We have seen already the Angul 540 megawatt, 2 into 540 megawatt, they have taken some jobs. Now, Amarkantak, that will be revived, that is 1320 megawatt, and then KSK, that is Mahanadi projects also 3600 megawatt. For all these projects revived, that also adds up to the opportunities apart from the new capacity additions, what is expected. Now, on the O&M side, the product mix has improved for the better in terms of O&M order backlogging. The order backlog, major orders we have taken in Innocence Limited, 229 crores, and then 674 crores in the revived projects in Meenakshi, 1,000 megawatts. And they have got their customer has favored us in these 2 projects. And then the new projects which are going to be commissioned, Ghatampur, and then Raichur 2 into 800 megawatt, Ghatampur 3 into 660 megawatt. Therefore, as the new projects get commissioned, the opportunity not only in the installation side and construction side, but the O&M side also will come up. And the present, unless the capacity addition goes up to 10,000 megawatts, they cannot reach the 280 gigawatts by end of this decade to have a grid stabilization. So overall, what we can say is that last year order booking about 8,700 crores. We are aiming at nearly 12,000 crores, and then that should be seen in the context of the new government coming up and the more focused investments in infrastructure and also private sector investments. And it's expected a lot of private sector investment also will come up in various sectors. And now Power Mech is a highly diversified group into various sectors, in infrastructure, in construction, EPC jobs. Another important development is taking place is in the EPC sector, because what the government is feeling is that particularly they have to see that more the power sector jobs should go in a faster development mode. And now we have no bid recently for the Singareni job, balance of plant, complete balance of plant based on the qualification BHL has provided. And BHL will give on a complete back-to-back if it takes shape finally. And then there are a couple of other projects also will come up. Even NTPC is planning a change in the contract structure between BOP and the main plant work, so that they can have better control and execution to the contracting more. And many other customers also, like DVC also is planning. And then with these opportunities for us, bigger size of the project, our projects can come up, and that also improve the opportunities for us. Thank you very much. Yeah, I request Mr. Rohit, President BD, to give an update on the mining and other sectors.
Thank you, Ramaya sir. Good afternoon, everyone. I'll give a quick update on mining activities. Coming to the two MDO projects that we're executing currently. The first MDO, we have, in terms of, there were a lot of developments that took place over the last 1 year. The first MDO project, which happens to be Kotre Basantpur, we have achieved forest clearance, stage 2 forest clearance on the 14th of March this year, and we have already obtained clearance to take possession of land over the next 3 months as well. So the request letter has been submitted to CCL for the declaration of the appointed date, which we are expected to receive by end of this month also. And we anticipate the mining activity starting from tree felling and overburden removal to start somewhere in the month of September. So the first revenues from this mine are going to start flowing in from Q3 of this financial year as well. Coming to the second MDO, Tasra, that we won with SAIL, we have achieved a production of around 2.88 lakh tons, and we have dispatched the same to, the dispatch of the same has started to say. And the target for next year is around 1.45 to 1.5 million metric tons, which is pretty achievable. So these are, and we have also made a lot of progress with respect to the R&R colony in the second mine. Phase 1 of R&R colony, we have to construct 190 units in 4.5 acres of land, and we are 70% through this process. And phase 1 should be completed over the next 3 months. So this is an update with respect to both the mines. And I would also like to take this opportunity to summarize and highlight a few of our achievements over the past financial year. So this year we have entered into our Silver Jubilee, and our Silver Jubilee year has also coincided with PMPL achieving highest ever revenues, highest ever EBITDA, and highest ever PAT. And we have also achieved the highest ever order booking this year. And international business has shown strong growth, and it also looks promising. International O&M has grown by 55% compared to FY23 to FY24. And we have successfully raised funds for our mining projects by way of QIP, and our credit rating has improved from A to A+. Thank you. Yeah, and we can go ahead with the Q&A.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Thank you. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Khanna from Purnartha Investments. Please go ahead.
Yes. Thank you, sir, for taking my question, and congratulations on a good execution here. I had a question regarding the O&M segment. Your O&M order book is reduced to 3.5% if I consider the MDO contracts as well. So what gives you confidence that the margins should improve from here? This is my first question. And secondly, what are the margins on the MDO contracts? If you could just give me a ballpark, that would be helpful. Thank you.
Yeah. See, the one is the renewal of the projects that is going on wherever it comes. But what is important is that, how the new project, new O&M contracts, what we have taken, I told you, that will have subsequently better margins. Hindustan Zinc Limited, 229 crores, then Meenakshi, 674 crores, Ghatampur, and then, KPCL. Mech has got a huge expertise and experience developed over the last more than 10 years in O&M. And that should help us in seeing that, the improvement. And actually, O&M is a good business for us, and with the improved order booking and with better orders taken, the margins profile should improve. And one more thing, important thing is that the drinking water scheme, what we are executing, we have done out of 2,726 crores. We have done about nearly 1,300 crores. And now once these villages are getting 100% completed, there is a separate order which is there, part of the original order which we had not captured. Now we have captured it to 681 crores. That has got a installation cost from those facilities. And then with that, that also will come as a revenue stream for the next 10 years. The full 2,726 crores budget is completed. Whereas annually we can expect about 60 to 70 crores with better margins. And therefore, on the new projects which will be commissioned, perhaps the 25,000 ongoing projects in the power sector which will come for commissioning. Therefore, that also we are also targeting many projects in that. For overall, and then more than that, the shutdown jobs and then the international business also is looking up for the O&M. White is concentrating a lot on that. That will add up to substantially apart from the AMC jobs.
For FY25, what should be our target for order bookings in the O&M segment?
O&M, we can say, I think around plus 2,000 crores we can keep it.
Fair enough, sir. And what are the ballpark margins for the MDO segment?
Right. MDO, so we have 2 mines, sir. The first mine, Kotre Basanpur, which doesn't include a washery, we are expecting an EBITDA of 18 to 20% once we reach peak rated capacity. And the second mine, Sale 1, we are expecting to do an EBITDA of 27 to 30% once we reach peak rated capacity, which is 2 financial years from now.
Fair enough, sir. But when I see the numbers for Triveni, Sainik and other guys, those margins look quite low as compared to what you just quoted. So is there anything that I'm missing over here?
No. I'll tell you because we have, if you look at our pattern in taking both of these MDOs, we have only focused exclusively on coking coal. These are both coking coal MDOs. All the other MDOs, that mostly it's the coal MDOs with less stripping ratios, usually have EBITDAs of 15 to 20%. People play around that region. But since one, we have a high stripping ratio here, and also there are some risks with respect to R&R, which automatically innately get added to the margin profile. So that's the reason we have better margin.
And any target revenue on the peak capacity for MDO business? I mean, in FY26, what should be our revenue from the MDO business?
FY27 is our peak. FY25, 26, FY27 is our peak, and peak revenues will be
4 MTPA. That's 4 MTPA roughly around translates
to 1,800 to 1,900 crores, sir. Both the MDOs put together with the washery.
Fair enough. Thank you so much, sir. Thank you.
Price escalation, it will come to 2,000.
Thank you.
Thank you.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Yes, sir. Thank you for the opportunity. A few clarifications from your comments. So the MDO revenue booking on Coal India will start from Q3, right?
Yes.
And the sale, you have given a 1.5 million ton target of production. That is also for FY25.
FY25, sir. Yes.
So both these MDOs will start generating revenue this year.
One already started, sir.
One already started. Yes.
Last year we booked around 45 crores.
Yes.
And this year we will do this 1.45 to 1.5 million metric tons in FY25. And KBP, the first MDO, is also going to start generating revenues from Q3 onwards.
Then you mentioned 30% revenue growth for FY25 as your company target?
Yes.
That includes this revenue coming from the MDOs?
Yes, sir. Very much.
How much have you assumed there on the MDO?
300 crore we assume, sir, from both the mines together.
Okay. Will you make any EBITDA at this 300 crore?
because the other mine is only newly starting, so initial overheads will be there, but the Tasra, we can generate EBITDA margin in the Tasra.
Yeah, we can expect some EBITDA, sir, from both of these mines, but not the PRC, not the peak rated capacity EBITDA. Definitely, I think it will be, the EBITDA is also going to ramp up with the ramping up of capacity. So initially, I think the first 2 years KBP, you cannot really, it will be in the range of 11 to 13%, and Tasra will be in the range of 14 to 16% EBITDA.
Okay, so I was just wondering, when you're mentioning margins will expand this year, so there is some EBITDA margins on this FPO business. And on the mix side, you will see some improvement coming from the O&M, right, in your overall revenue mix?
Yeah, because of the better backlog of orders.
Because of the better backlog. Will that push up the margins?
There's slight improvement in the EBITDA margin, sir, not big way, because right now in the current year also we are having 26% mix of O&M, so we are expecting the same O&M mix and the projected turnover also. And being MDO from mix will be varying from 1% to 5%. So overall there is a slight increase in the EBITDA margin, maybe by 0.3 to 0.4% additional. Probably around 12.6% we will achieve the EBITDA during the FY25.
And my last question is on the Adani order progress to FGD. What is the progress there? Because that's a 5,000 crore backlog in your 17,000 crore.
Yeah, I think the Udupi project is taking shape well. Already revenue has started coming there. This year there will be substantial progress. About 1,200 crores of ordering has been done up to the Udupi project, and then the work has also started on site also. Site has been fully started. We expect at least 350 crores of revenue on that. Only thing, the other projects, there are as usual maybe issues of local issues, and then local sizing issues, and then fitting up the things are all retrofit jobs. There are other layout issues can be there. Apart from that, some PPA also can be there. That is where can be some this one. But Udupi is going to take up. Perhaps the end of third to fourth quarter things should improve for the other projects also. Other portion of the jobs to other projects.
Okay. So I didn't understand, sir. Out of 5,000 crore, how much is executed? How much will get executed this year?
Sir, the FY25 we projected around 305 crore from the Udupi. So far we have recognized 157 crore revenue we have done. Another 300 crore we are projecting from Udupi.
So then is this project now become a 5, 6, 7 year execution project of 5,000 crore?
Yeah, it depends. See, FGD has got, we know right from the beginning, FGD had other interface issues and all. Particularly, one is the PPA is an important ingredient of the input required. Unless the PPAs are properly in place, then I have to take a call on that. That is where this thing will be there. And then the second aspect is the layout issues, because this has to be fitted into a limited layout. Outside, just outside the boiler, and the old plants were not designed for FGD. Therefore, they were designed for conventionally. Now, when they fit a new system, which is the old layout, obviously there can become issues. That is where they are more cautious and taking some time. And then perhaps once the elections are over, the government comes, the more push will come on that for the new investments also, because 104 gigawatts ordering has been done. Another 65 gigawatt ordering has to be done. That also will get revived based on that. Yes, on that we have to see. I agree. There can be some aspects we have to look into this.
Sir, it won't, I'll just add to what Ramaya has said. It won't be a 5-6 year window. If you look at our Udupi, what we are executing currently, we are on track. There is only a delay of 6 months, I think, initially because of engineering approval delays from the client side. But otherwise, once we have proper clearances in place, it's just a matter of 22 to 24 months of execution cycle. But naturally, I think there is this slowdown in terms of FGD across the country, so we can expect we'll get better clarity. It's still shrouded, but we are around Q3 this year is when we'll get to know what's going to happen to the engineering we did for these plants. that we have been asked to slow down.
Okay. Thank you very much.
Thank you, sir.
Thank you. The next question is from the line of Rajesh Kumar from Bright Shopping Private Limited. Please go ahead.
Yeah, hi. Hello.
Hi, Rajesh.
Yeah, can you hear me?
Yeah, yes, yes.
Yeah. My question was on your this annual revenue. Annual revenue jump over last year, over March 23, was around 18%. So what is the reason actually, despite all the orders which are in hand, why there was lesser execution on the ground?
Can you just repeat?
Hello?
No.
Can you repeat the question again?
Yeah. Can I hear the question again? Sorry.
Yeah, sure. I was comparing your annual revenue over 23 to 24. There is a jump of 18% only. So despite so much of orders in hand, what was the reason of less execution on the ground?
Yeah, one is we have seen there were some issues on the FGD front. That is a major portion of it. Second is the UP water schemes also. It is working on well, but what is the problems are, I don't say the problem, the issues there locally is that every village is a project management structure, center is there. And then, it is village-centric development. Even though a lot of push is there, capital is there and funding is there can be small local issues and all. There was some gap in this. But barring these two, in the rest of the things and the O&M and other projects we have done quite aggressively. That is a major fact.
Okay. Well, in current year, what are you targeting the FGD order? How much FGD conversion would be there in the current year?
Around 300 crore we are projecting from FGD, sir, current year.
Sir, we have only considered the current UDP project that's under execution and for which we have full clearances to execute. So we have only considered 300 from UDP. But if anything, any other clearances we get in Q3 will be a bonus. So that's only.
Till now, out of 4,000 crore rupees of order, what is the total billing done already?
See, out of the only one UDP project only we started billing, so we are actively doing work. Around 157 we billed so far, and we are targeting 300 during the current year. So we have already issued a lot of work orders to our procurement vendors and all. So we are expecting that billing will happen 300 crore during the current year.
And all of the projects put together, we probably did around 10 crores only for engineering and all of that expenditure. We just billed for the engineering side, but nothing significant.
Yeah. Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ria from Equities Investment. Please go ahead.
Thank you for the opportunity. My question is, we've seen a resurgence in the electric work order intake. So where is this coming from?
Yeah, that has come mainly, madam, because we have taken 1,250 crores of railway jobs. It is a combination of civil track working and also railway electrification. And then substantial portion of the jobs is the railway electrification. That's what I told you. There is a jump in our overall backlog of the orders for the this one, O&M. It has gone up substantially. That is the main reason. And that will, we expect, the electrical business also can have some improvements with more of the railway jobs and then transmission and distribution projects coming.
Yeah, just add to what Ramaya has said. So we are still sticking to our strategy and objective of not aggressively expanding or tapering down our transmission and distribution in the electrical space. We are only focusing on these railway composite jobs that have some electrical and signaling and telecommunication components. A skill we have built over the last decade in executing various railway projects or standalone electric or SMT projects. So that's the only revenue increase that we have seen, because this team will be assisting a civil team in executing the overhead electrification and the SMT part of these railway projects.
Got it. And in terms of my order intake for this quarter, we're seeing a little decline, so around 3,000. On a quarter-on-quarter basis, it's a little bit 3,460 crores around. So, is this on account of election, or we're seeing a general kind of declining order?
This is because of the code of conduct, so we are not getting much of new tenders are not coming, and we are waiting for the. We were declared as L1 in couple of the projects, so we are waiting for the LOA copies to receive them.
What is the one amount?
Two L1 project status is there. One is for the mega nuclear projects on the one side, that is the steam turbine side, about 570 crores. Other is the one
Footward bridge, we were L1 and yesterday.
Yeah, that both of them will come around nearly 700 crores, both the orders together.
I think we can.
700 crores nearly.
700.
Both the
For the current
We are L1 in 700 crores worth of projects, and we have bid for close to 4,600 crore worth of projects that are yet to open.
Yeah.
So that's we're expecting all these things in a gradual phase manner to open up starting from first week of June. So a couple of them have opened. We were L1, but we are waiting for the LOA copies again, expecting in the first week of June. And the other orders are expected to open in the first week of June as well.
Right.
You'll see that inflow. The spillover of Q4, you'll see that inflow in the month of June.
Okay. Got it. Thank you. That's it from my side. I'm going to keep for further questions.
Thank you.
Thank you. The next question is from the line of Bapodra Mayur, an individual investor. Please go ahead.
Hello, sir. Congratulations on good set of numbers. Actually, my question was around FGD project. So the slowdown we are witnessing, it is due to any technical issue, or it is from the client side, or it is from our side? That I wanted to know.
No, there is no delay from our side per se. There are, see, all these things need to have I think I have told you earlier also, one is the engineering fit up which is required in an existing plant with an old design. That has got challenges. The second thing is that, the additional investment any customer makes, he expects a revenue stream. For that, additional PPA has to be worked out with the local regulatory commissions and then the local distribution companies and all. That is the main thing. Therefore, they are committed already. 1,200 crores of ordering has been done. Udupi, and as we said, the third and fourth quarter, the other projects also took action.
Okay. And are you bidding for any other FGD projects? How FGD tendering is going on in other areas, other power plants?
Yeah, it has to come because 104 out of 169 gigawatts of the planned FGD, 104 gigawatts have been ordered. And then the total commissioned is about 10 gigawatts as on today. Now there is a general little bit of a slowdown of so many things are there in this because it is a new technology and then retrofitting and then so many other aspects are there. But now it's a learning process done and more plants are getting commissioned, perhaps it should improve and then balance 64,000 megawatts ordering, they have to push it up now. Maybe that should take some sort of a push now after this in the current year.
And what is the deadline from the government for this FGD?
I think this is the international commitment. Now the latest international agreement is COP 2026. Earlier it started 2015. And that continues to be there to reduce the emissions both of the sulfur, SOx and MOX. And there is no denying that fact. And in fact, when we have a net zero commitment, national commitment by 2070, these investments have to happen. Only the typical of this type of things, the investments have to be matched by the revenue stream also. That is where, after all, the power has to be sold to the public and somebody has to pay for that. That is where these things have to be sorted. The government will definitely has to push for that.
Yeah, and Indian deadlines are for Class A cities it's 2026, yeah. Class B cities it's 27, and Class C it's 28. So we are expecting, I think, probably after elections, there may be a push up by a year more of these deadlines. So we are just, we have to wait and watch.
Okay. And sir, regarding the MDO projects, 2 quarters back, we are not planning for any new MDO. So right now, are we planning for any new MDO orders to participate in?
No, sir. No new MDOs. Until we reach peak rated capacity of these MDOs, we don't plan to bid for any new MDOs.
Okay, so beyond 2027.
Yes.
Okay, so that's it from my side. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Khadija Mantri from Capri Global. Please go ahead.
Hello, sir. Am I audible?
Yes.
Yeah, sir, my first question is regarding the FGD system. So I was wondering that if more orders are awarded in FY25 for FGD, but then we already have an order book of 5,000 crores for the same. So do we have enough resources to take on more orders in the FGD segment? Or we will be confined because we already have a large order book in the segment?
I think as far as the resource is concerned, we have developed HR resource base. We got 33,000 HR base in the various mix and for base in civil, structural, mechanical, engineering coordination. Now, as far as the plant construction and other aspects is concerned, procurement, we are strengthening those groups also. And then plant construction, we are perhaps the leading player in the country. And we have delivered project after project on time. That's why we are getting repeat orders from many of the customers or valued customers only because of this. Recently, some of the orders on the power sector side has come specifically because of our standing in the market, of our ability to complete the projects in time. I think that is not a constraint at all for Power Mech. We are well equipped with all the resources and equipment, and also that expertise what we have developed in diverse segments, and then that is well in place.
Also, have you received any order from BHEL for the Singrauli plant NTPC one?
Yeah, BHEL recently, Talcher, we have taken a 355 crore order. That is the NTPC job 2 into 660. Then Mahan, we have taken 825 crores. That is BHEL supply order, and the supply order has been got from the Adani Group. Whereas the site work of 825 crores, civil and mechanical work, they are given to us. And BHEL, in fact, madam, I can say BHEL is standing with a new order of 70,000 crores for 10,640 megawatts, as I told you. All these things will come for tendering in terms of Lara, Talcher, including they got recently. In Talvir also they got recently 19,422 crores. Yamunanagar they got recently 5,000 crores. Then Raigad and then Mahan. And then new orders also expected. Seabat, DVC, Raghunathpur and other jobs also. Once they come, perhaps BHEL is in the front line unless the tendering structure changes. Therefore, we are quite bullish on the power sector and also BHEL.
Okay, sir. And my last question would be regarding this MDO project. So the order price that we have arrived at, does it consider all the price escalation in any risk? This is a long-term project. So how have you arrived at the order size, and what kind of IRR that you are looking for in these two projects?
Ma'am, this price doesn't naturally include price escalation. This price is exclusive of price escalation. Whatever we have said, the 30,000 crores of the sale project that we won, and also in the first line. And see, these tenders are usually based on a per ton of coal basis. So we have to initially, there's going to be a development phase of 2 years. And yeah, can you hear me?
Yes, sir. Yes.
Yeah, so there's going to be a development phase of 2 years, and we'll be progressing with some interim mining during the development phase. And we have to slowly ramp up the production facility to deliver this much amount of coal on a year-on-year basis until we reach PRC, after which we'll reach steady state operations, and we have to produce and gives that amount of coal for the rest of the life of the mine. That's how the pricing in mining works.
Okay. Thanks.
Thank you.
Yeah, that's it. All from my side. Thank you.
Thank you. The next question is from the line of Dinesh from RDST Capital. Please go ahead.
Hello, sir. Can you hear me?
Yes,
Yeah. First of all, congratulations on a good set of numbers. My question was related to MDO. So when we say we are going to reach peak, operations in next like 2 years or 3 years, so what kind of revenues and margins you would expect from these two MDOs?
So both the MDOs put together, Dinesh, I've already mentioned earlier, I think in one Q&A, 2,000 crores without price escalation as of today's price.
Okay.
And EBITDA of 17 to 20% in the first mine, and an EBITDA of 27 to 30% in the second mine. This is starting FY27 onwards.
Okay, that's great. Just another question related to this. Do we have any consortium here, or like the whole project is carried over by Power Mech company itself?
No. We had to form a consortium to bid for the project since we didn't have the credentials, all the credentials to participate. But the execution-wise, both the projects are completely being executed by us with technical support from our partners in both the consortiums.
Okay, so do they also share some of the revenues there in that project, or is it like 100%?
100% our revenue. They don't.
Okay, that's great. Okay, that's it, my question. Thank you. Thanks.
Thank you. The next question is from the line of Natasha Jain from Nirmal Bang Institute. Please go ahead. Hello, Ms. Natasha, your line has been unmuted. Please go ahead with your question.
Yeah. So most of my questions have been answered. Just two questions. One is, can you give us the breakup in terms of the order inflow for each segment for fourth quarter?
Yeah. For the Q1, we received fourth quarter. Okay. Mechanical, we received around 525 crore. Civil around 1360 crore. O&M 739 crore. Electrical 702 crore. And overseas around 218 crore. Total together 3,546.
Understood. And so lastly, now that you've answered all about all these segments and how the order book is looking like, so at a consolidated basis, can you tell us what does now your revenue guidance stands in the medium term, maybe FY25 and 26?
So the 25 we are projecting around 30% growth, maybe around 5,500 range, and FY26 after that we may project because we are order inflow we are expecting 12,000 for the 26. So most likely we may plan again 25% growth on the FY25 numbers. Maybe around 7,000 crore we can target by 26.
Understood. And so lastly, any capex that we are looking to do, or just a maintenance capex?
Yeah, in PMPL regular equipment and all around 100 crore capex we are doing in Power Mech, and washery of around 240 crore. So around 340 crore we are planning in Power Mech capex during the current year.
Understood. Thank you. So that's all from my end. All that.
Thank you.
Thank you. The next question is from the line of Mohit Khanna from Purnartha Investment. Please go ahead.
Yes, sir. I had a follow-up on MDO. So when you just mentioned that these contracts don't include any price escalation, does that mean that our EBITDA margins would likely to go down as the contracts age, because, or how does it work?
No, sir. I said the value that we have declared doesn't include the price variation. It's unaccounted. But there is a price variation clause in the contract. So whenever there is an increase in diesel price, whenever there's an increase in the consumer price index, we naturally get a price variation based on a formula that's set out in the contract.
Understood. And you get paid as per the quantity of coal that you mine.
Yes, quantity of coal that we mine, and we give it the delivery point in a prescribed size according to the contract.
Okay. And this pricing is dependent on the coal price?
No, not at all. There is no offtake risk here. So irrespective of the coal price or the general economic scenario, they still have to compensate because we are building our infra to achieve PRC. They have to take this from us. If they don't take this from us, there are other clauses that will kick in, compensation clauses.
Yes.
Sorry to interrupt, sir, but the current participant has been disconnected. The next question is from the line of Sunil, an individual investor. Please go ahead.
Yeah, thank you so much for the opportunity, sir. So the small question, the capex which you have mentioned for the maintenance and all, will be funded through internal accruals or?
This 340 crore of capex, regular 100 crore of routine 100 crore is through term loans. We will raise around 60 to 70 crore of term loans. Balance is through internal accruals. And washery, we have earmarked QAP funds we raised for 240 crore earmarked funds are there for washery investment. So we are using that funds for the washery.
Okay. Thank you so much.
Balance is the internal accruals.
Okay. Thank you so much. That's all.
Thank you.
Thank you. The next question is from the line of Satyan Wadhwa from Profusion Investment Advisor. Please go ahead.
Could you guide us to what the tax rate is likely to be in FY25 and FY26?
25%, sir. As of during FY26 and 27, we are projecting around 25%, 25% to 26% will be the tax.
And even in FY25 as well?
Yes, sir.
And overall margins would be similar to what they are now, or do you expect some uptick going forward based on the current order book and execution plan?
Slightly, there is a 0.3% improvement, sir. The PAT rate will improve compared to the last year because of the tax rates. So there will be improvement in the profit margins during FY25.
Sorry, I was asking about EBITDA margins, not PAT margins.
Yeah, it's a 0.3% probably will be improvement will be there in FY25 compared to the FY25.
Thank you. Thank you.
Thank you. As there are no further questions, I would like to hand the conference over to Ms. Natasha Jain for closing comments.
We would like to hand over the question to the management for closing comments.
Yeah, thanks everybody. Thanks for the participants. I think we have seen a significant improvement in the previous year in terms of overall order booking. And with the new policies of the government and the focus on the investment coming in the private sector and infrastructure continue to push and power sector opening up, and then exports also we are looking at new opportunities. Perhaps, we should look at improved order booking, and also the margin status has been extended. And we should reasonably do well in this year. And we have got a strong base of 17,000 crores that should help us to achieve the revenue what has been projected, and with the margins what has been incorporated. And we look forward that the Power growth story will continue to maintain in the coming years also.
Thank you, sir. On behalf of Nirmal Bang Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.